Boom! We are live. What is up, everyone? Happy Friday. Welcome, everyone that's coming from the All Access. That was some great programming. Shout out to Michael Murray and Spencer Israel. We've got a nice Friday planned for y'all, as always, here at 12:25 p.m. Eastern. Tim Quast will be joining us. Now's a great time for us to discuss market structure, kind of what's going on in the markets right now. Where is everyone kind of standing in terms of market sentiment heading into the weekend? Of course, we've got all these catalysts between inflation, interest rates. So great time to talk to Tim. After that, at 1 p.m., Tony Benson from Patterns in a Flash will be joining us. We'll be talking some technical analysis. We'll be looking at charts. So if you've got any charts you want to check out, if you've got any stocks you want us to look at, stay tuned for Tony Benson at 1 p.m. And then at 1:30, Alex Cole from Go No Go Charts will be joining us. We have a whole hour of charting of TA from 1 p.m. to 2 p.m. So I'm excited for that. And it's Friday, so we're going to mix in some games, here and there. We'll do a guest stat chart. We'll check in, because we haven't done it in a while. We'll check in on our stocks of 2022. We'll pull up that spreadsheet, see how that's doing. So we're going to have a fun Friday here. If anyone's got any topics, any stocks they want us to touch on, for sure, let us know in the chat and we'll hit on them. I got to go ahead and get this chat pulled up. Rohan, go ahead and roll the intro.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. Boom. All right, y'all. What is everyone watching today? I've got some trades out there. Not doing too hot today, but I don't know. I might just trim all my positions, at least the options positions, heading into the weekend, because I don't know. I don't like to hold those positions in the weekends unless they're very high conviction or more swing plays. But yeah, so yesterday we got that hot inflation number in the morning. And it looked like the markets were kind of brushing it off. But today we might be getting that, delayed reaction, right? Qs are now down over 1% right now. You compare that to the SPY. SPY's only down about 0.5%. So tech is getting hit a little harder than your overall market right now, which that's what you can expect when we have inflation running hot like this. So I'm not looking for tech to make any huge moves until we get some more clarity on the rate hikes. Let me go ahead and okay. Now I can finally see the chat catching up with it. How is everyone doing? What up, Easy Mike? What up, Shelly? What up, Tom MySpace? Tom's saying he's got the SoFi strikes for next week. Let's go ahead and get the SoFi chart pulled up. Let me get my Benzinga Pro up. And again, if you guys don't have Benzinga Pro, this is what we're using on the show every day for pretty much everything we need to do in terms of seeing any news on a stock, looking at the chart stock. And if you haven't checked out Benzinga Pro, free 2-week trial. All you have to do is go to pro.benzinga.com. All right, let me get my Benzinga Pro pulled up. I don't know. Can you guys hear Spencer? Spencer, Spencer, if you want to take a second, you could take us. Spencer.
I just took a second.
All right.
I took 4 seconds, and now I'm here.
Well, now Spencer's here. I just wanted to let him know that if he wanted to keep. Tom, looking at SoFi's chart.
Wait, Tom cannot be trusted.
Tom
took the money and ran.
Yeah, but those were still kind of the, internet wild west days.
Yeah, actually, you know what? That's true. Tom, the alternative was turning into a Zuckerberg, and Tom didn't do that. So, you know what? Go Tom. We should be more like Tom.
Was one of the MySpace guys also one of the Napster guys?
Really? Tom, can you speak to this?
I don't know.
I don't recall anything about Napster being involved in MySpace, but it's good.
Wait, what's funny is Justin Timberlake in real life bought Napster, but didn't he play the Napster guy in The Social Network?
Yeah. He played what's his name? He played Sean Parker. Yeah, Napster guy, right?
But then in real life, Timberlake bought MySpace, or not MySpace, or maybe he did buy MySpace.
No, he didn't.
He bought Napster.
I don't know. I don't think he bought MySpace. So I think AOL bought MySpace. You hear, Tom? I'm so glad that we can change your life like that. That's awesome. No, you were just talking about Benzinga Pro, right? Were you going to go on SoFi for a minute, or were you going to just go more?
Tom MySpace said he's got $13
calls.
$13 strike for. Well, he said $13 strike. I don't know if he means
for next week.
If he means puts or calls, but we're sitting right at 13 right now, like 12.90. But looking at this chart, I mean, you can see mixed in the past week or so, but still, we've made this move from about 11.50 up to about 13, so $1.50 move. You can see more green than red in the past few days, so it does look like. I mean, this chart, zooming out on SoFi's chart, it's so symmetrical, right? You've got this big top here, came back down, top again in the middle, and then here another one. So not surprised to see SoFi get crushed down like this, but what I will say is it does look like, for at least right now, we've kind of found a bottom in here. We've kind of been trading sideways, consolidating. It seems like SoFi doesn't really want to dip that much more below $12. So I don't hate this move right now. Again, Tom, I'm not hanging on to really any of my options positions over the weekend. Let me see. Speaking of, Mike's watching the Olympics. Spencer, did you catch Shaun White's last run last night?
No, I actually didn't. I know he fell.
Yeah,
but I didn't. I haven't. I have been very. This has not been a very easy Olympics to watch.
Are you boycotting it?
I not intentionally.
Okay.
I'm just like, I love the Winter Olympics, and yet I'm not into it. Like right now, I'm not. Maybe it's because I tried watching it and I don't have Peacock. Maybe like that's it. You have to get Peacock to. How are you watching it? You just pirating?
No, I have NBC.
I have NBC too, but like you only get like the one thing they I don't know. I just haven't. I've seen highlights. I saw Michaela Schifrin crash out twice. That was horrible. Oh, Easy Mike. That's true. They've been preempting Kramer. I don't know. Maybe just like I don't have a good reason for it. I just haven't been into it. So I know to answer your question, I did not see Shaun White last night.
Well, I wasn't really watching, but my buddy texted, or in like a group chat I'm in, my buddy was texting and was like, Shaun White's about to make his last run ever, and I was like, oh, I got to turn that on. So I turned it on and spent like 30 minutes waiting for him to make his final run, and then he finally did, and he fell. So it was a little bit disappointing.
Yeah.
But speaking of
disappointing, what about my portfolio today? Hey. Be here all week.
I was gonna say, speaking of mentioning, we were talking about MySpace, Tom being why isn't this working, Rohan?
Dude, the Stream Deck like works one day, not the next. It makes no sense at all.
It's finicky, fickle.
Yeah. Okay.
What I was gonna say is, speaking of, when we were speaking of MySpace, Tom, and I mentioned
Shaun White. How did we get on this tangent?
Shaun White, we got on the tangent. How did we get on the Shaun White tangent? Someone said something. Oh, Easy Mike said he's watching the Olympics. I was going to say, speaking of Wild Wild West internet days, did you see the FTX guy, Sam Bankman-Fried's testimony to Congress?
No. Why am I so far behind the times here?
So Sam, this guy's like my favorite guy right now.
Sam, he's like, you think he's like your age? No, he's not. He's like 29.
He's like 29. What's his name? Sam Friedman.
Sam Bankman-Fried.
Bankman-Fried. All right, look at this shit. He literally, while he was starting FTX, would sleep on the floor at work.
Yeah, you got to be. Wait, can you bring up your screen?
Oh, I thought
Wait, what's this? Is that him?
Yeah, he's that's his desk. That's his battle station. He's got 4 monitors, and instead of leaving the office, he would just sleep at the office, take 2-hour naps, and then keep working. But yeah, so this guy is just a killer. What's his net worth? I mean, he's worth
He's a billionaire.
He's
a billionaire.
He's worth $22 billion. So anyway, but my point in bringing this up was I was surprised because most people in his space that are like crypto entrepreneurs,
Yep.
they're very against the idea of any type of like government regulation in the crypto space. And it's kind of regulation in the crypto space is kind of antithetical to the whole idea of decentralized finance, right? Decentralized finance, the idea of it is that the people have control, not a government or not a regulating agency. But Sam Bankman-Fried basically went to Congress or testified and said, we should have more crypto regulations. I think he's seen over the past year, 2 years, more and more scams, rug pulls, et cetera, come up. And I mean, we just saw with the crocodile at Wall Street. So he's basically saying he wants a larger role in the government being able to regulate crypto to protect crypto traders that may have gotten burned by some of these scam things. So I think, right, and I do think it's important seeing someone like him who holds that much weight come in and say, hey, I know everyone in the crypto space doesn't want regulation, sees regulation as a dirty word, but maybe we need some. So he's kind of being a proponent of that, outspoken in his own community. We'll see if he then gets ostracized within the crypto community.
Doubt it.
I don't think he will because he's like the biggest. I mean, between you have Michael Saylor, you have
they're different. I think they have different levels of cachet. Michael Saylor is more of like a rah Bitcoin guy, and Sam Bankman-Fried's more of like a I'm gonna like disrupt the world guy. Maybe, I don't know.
Ooh, Easy Mike.
Wait, I was about to go to that. Is that where you were going?
No.
Oh, Easy Mike. Okay, fine. Well, let's address this. Yesterday on the show, Vivi, the Bio Queen, was doing as she does. She was pounding the table on Sens, SENS. Well, they're having themselves a day. I wouldn't call it a good day, but they're having a day nonetheless. So here's the news. You don't even have to go to a news feed. It's right here. It's in our little why is it moving box. They're down because the company issued sales guidance below the estimates. That's all you need to know. Look, to be honest with you guys, I find the biotech space incredibly difficult to participate in. This is one of the reasons that we brought Vivian in the first place, was because she has more fundamental knowledge than certainly I have. Zero fundamental knowledge of the space at all. Doesn't mean she's always right, but like, we saw, I think, I forget who was that connected with her. Maybe it was you or Jason, Aaron, but she seemed to have her ear to the ground for biotech. So that being said, it's a ridiculously hard space to play in. So I hope she's doing okay today on SCNS. I'm sure she's doing fine because her favorite stock, which is BCRX. Did I tell you that I bought some?
You did. Well, I heard you yesterday on the stream say that you bought some of your account.
What the hell? That's not it. That's the wrong number. BCRX. That's the
Psych.
One. Psych. BCRX is up at $18 today, so I'm sure she's doing just fine. But yeah, Easy Mike, that is really shitty timing. That's all. I don't even know what to say. It's shitty timing. That's it. On Sens. Sorry. I hope you don't own it, and if you do, I hope you have stops. I don't know. Anyway, so here's the deal. Did you go over the guest situation today? We're gonna have Tim Quast. We got Tim Quast in a half hour. It's been a while since we've had Tim Quast on this show, so I'm very excited. We like talking to Tim. I wanted to do a thing. So the title of today's show, Aaron, is How to Find Hot Stocks. I don't want it to just be a clickbait title. Did we actually go through that?
We haven't yet, but I wanted to do this, and one of my methods for finding,
there are memes on CNBC now. That's weird.
They're probably talking about liquidity, tech names report. No,
I don't know. Anyway, who cares?
What I wanted to do was I wanted to look at a scanner. We can go to Benzinga Pro. And a lot of times, you want to buy low, sell high. But what I like to do is run a scanner and find what stocks are trending, like are close within like a 10% range to their 52-week high. Because what's that showing me is that Wall Street investors, institutional investors are hot on this stock. They like this stock, right? It's in favor. I'd rather buy a stock that's in favor than a stock that's out of favor.
All right, so let's do a few different things. You are gonna set, or let's just do it together.
I also got to address this real quick from Jay Rice. I cannot believe I missed this. Right when natural gas was getting hot and everything, I was like, let's check back in on our good friend BTU on Peabody Energy, which is a St. Louis company. It's where I'm from, and I guess the past week the stock's made a 20% move. It's gone from about when I called it out, it was at $10. It's at $15 now. But looking at the chart,
right, sorry, I'm getting the chart up. I have a different page.
Well, but don't let us lose our train of thought of how.
I won't.
BTU, Peabody Energy. Looking at the chart, I think this is beautiful. And I'm not a huge chart guy, but I do play technicals when they match up with my thesis. But this like rounding bottom, right? When we see this chart, there's a good chance a lot of times on that way back up, it reaches to its previous high on that kind of bottoming out half circle pattern. So if we go back to the high before that dip, it was at, what was it, Spencer, $19, $20?
You referring to like this?
No. I'm saying that. Yes.
Yeah, 19. What's the all-time high? Well, no, 1972.
I don't know if it's all time because this company's been around for a while. But
1983 was the high from September.
Yeah, I think you see that pattern that more times than not, it ends up coming up to at least that previous high. So it is like one of those stocks that it's up 20% over the last week. Could we expect a little drawdown? Yes, probably. But overall, do I expect this to continue its trend and get back up to its previous high of like $19? Sure. And from 16 to 19, that's not a move to sneeze at. I mean, that's what, 15, 20%?
15 to 19? Is that what you said?
Yeah.
$4. It's like, what's that, 30%? High 20s?
Or no, I said 16 to 19 because we're basically at 16 right now. A $3 move from 16.
Yeah, sure. Call it 25, 22. Call it 22%.
Yeah, Jay, I'm looking at the earnings. They crushed it yesterday. The EPS estimate was 1.15, $1.15. They came in at $3.90.
Wait. Is this just an industry thing? Like, is there anything special about Peabody? I don't know. I'm asking. Is there?
Well,
anything...
Peabody is the leader in like coal energy.
Oh, they are. Okay.
But
wow.
But basically, the thesis is that okay, Omicron's ending, demand for everything is ramping back up. Green energy, clean energy. That's gonna be the next big thing. But we're not there yet. We don't have the infrastructure through clean energy and green tech to meet the demand that we're seeing right now. So what's going to fill that gap until we're there is our fossil fuels, natural gas, coal. So I think it's at least worth watching right now. I mean, we've seen, if we continue to see, I'm trying to read Christian Gallagher's. Aren't they a coal play? I thought Biden
squash that dirty energy.
That's what I'm saying. That's still the trend we're heading.
And yet
the trend we're heading.
Well, no, that's a long-term trend. The short-term trend is you're saying the exact opposite.
Yeah.
Yeah.
And like Jay Rice saying, it's cyclical. I'm saying that the long-term trend is that we're going to see oil, gas, fossil fuels get replaced by clean energy, but we're not there yet. So right now, demand is increasing for energy.
While the supply is going down, while the
supply is not going down for green energy. It's just not there yet to match it.
No. I'm saying the supply for coal is going down while demand is going up.
Is it going down? Oh, because people aren't investing. Yeah. I mean, people aren't investing as much in that space anymore, so there's going to be less production. So, we're not even close to being able to match.
Yo, so coal inflation now? I have to worry about coal inflation? Thanks, Obama, for that.
But is that the only reason coal supply would be decreasing? That just companies themselves aren't investing as much in that space right now?
I don't actually know this, but that's what I was getting at. Was like no, who in their right mind is like, yes, I'm going to invest in a new coal in a new coal mine like right now. I'm going to expand my mind. No one's expanding their mind size, right? I don't know how that works, but no one's doing that. Why would you do that?
Yeah. So until we're there, which we're ways away, right, from clean energy meeting our demands, we're gonna continue seeing some of these stocks that have gotten beaten down in the oil. Well, Peabody's different because I mean, you look at like something like Chevron. Chevron's at all-time highs, and if we continue to see oil, which also leads into our next point of
we have to. Yeah, we're gonna go back to that point.
Finding stocks that are at their 52-week highs.
Yeah.
Coal will be used to generate the power for all the EVs. Oh, maybe the power to power the charging stations? It's going to be coal power? I have no clue.
No. What? No, it's not. The whole point of this is like hydrogen fuel cells or natural gas or electricity, right? Isn't that the whole point? There are other sources, greener sources out there. Whatever. All I know is Peabody Energy is in an uptrend. That's a technical term, by the way, the uptrend.
Uptrend. And looking at the chart, like I said, I'd be trying to play this from maybe wait for a pullback, considering the stock's up 20% over the last week, but I'd be trying to play it from like 15 and a half, $16 to 19, get out, take your 15, 20% and run. The chart looks very strong there. And then if we break above those, because if you look back in like September and November when we were testing those $19, $20 levels, it came up there and hit that level twice and was rejected both times.
Let's go to a weekly. Let's see how that looks.
And if you, and if you, kind of what we're taught in charting world is if you test a level multiple times and then break through it eventually, that breakout's going to be higher. It's going to be a bigger breakout based on the amount of times you've tested that level. So if we go up and test it a third time, reject it again, and then we come back up and finally get through it, I'd expect to see Peabody break out nicely.
All right. Let's go back to the original point of this, which was, how to find stocks to trade, how to find hot stocks. If you don't have Benzinga Pro, you're about to get a free demo right now. We're not going to take too long on this, but this is how we do it. So this is the Benzinga Pro homepage. This is what everyone sees when they open Benzinga Pro. When you have nothing open prior to this, no news feeds, no data windows, nothing. This is bare bones. Okay. You wanted to go to the screener, right? Is that what you want? Because okay, fine. We'll do your thing and then we'll do my thing after.
Well, we can do your thing. I think they're pretty similar, right? You want to look for 52 weeks.
I want to go to a scanner.
That's Oh, you screener, scanner. Sorry, I get my. I get mixed up. Let's do your thing.
Okay, so okay, this is a scanner that I've made, and I'm gonna actually do a couple of them. So on the hold on 1 second. What's going on here? Wait a minute. I have to refresh. Sorry, some weird just happened. Okay, that's better. So I want to do a scanner because I want to see stocks that are moving as they're moving, right? We all have movers tools on our brokerage platforms, and we can see what's up today and what's down today. But I want to get deeper into that, and I don't really care so much as to what's up today from yesterday's close or what's up today from the open. I want to see like what's up in the last few minutes here, right? So this is a scanner, and I have it sorted by change in the last 5 minutes, and I actually want to add another one of these things up here, but for some reason my window to do that is not populating, which is kind of weird. So we're only going to use one scanner right now, but we'll first look at gainers and we'll look at losers. And so what I have here is I have a few different columns. I do have a couple of filters on. I do filter by volume. I just have a basic filter, right? Just looking for stocks that have traded at least 10,000 shares. That's not a high bar to clear, but it weeds out the crap, right? Like I don't care if a stock is up 10% and it's traded 100 shares. Because who cares? It's 100 shares. There's no liquidity there. There's no market there. So this is what I've got here. I'm looking at gainers in the last 5 minutes. This is how a lot of times when whether I'm on stream or not on stream, this is how I like catch stuff as it's happening. And this is how this is what will prompt me to pull up a chart and say what, or pull up a newsfeed and say what. So I have this set to refresh every 10 seconds. You can also set so it's real time. So we can always do that. But this is the first thing that I do whenever I want to see where the action is I look at I go to a screener, I look at the scanner, and I look at the last 5 minutes, gainers and losers. So right now, what do we have? We have CGTX, YQ, SFET, and these are relatively low volume here. There's nothing super crazy. NBRV, these are our top gainers, or basically spikes in the last 5 minutes. And on the other side of that market, on the loser side, so really, again, I'm looking at the tickers. You can see them right there. I'm also looking for tickers that I recognize. You know what I mean? Because I don't necessarily like look. So, I just saw Clover, CLVR, was on there. Where'd they go? All right, they must have had a nice green candle. I look for names that I recognize, and this is basically the first thing that I do to try to find movement, try to find action, try to find things that are happening as it's happening. Not so much like, hey, the stock is up 20% today, but like 18% of those gains happened at 7 a.m. Not interesting, right? Not interesting for anyone. I should have some more filters on here. We can even do that right now. Let's add some more filters because I want to filter out some super low price stuff. So let's filter out, let's say price just $5 and up. Okay. Let's filter out anything less than $5. That's fine. Cleveland Cliffs, 2% move in the last couple minutes. Is that intuitive surgical? No, it's not. Hey, Bakkt, BKKT. We talked about that yesterday. 2% move last 5 minutes. So that's a very simple thing. Again, this is the scanner tool in Benzinga Pro. It is in beta. That's a very simple thing you can do to just find movers as they're moving throughout the day. So that's what I wanted to show. What he wanted to show was the screener tool. Y'all should know what a screener is by now. You can find them on your brokerage platform. Although for my money, to be honest, I have yet to find a screener on a brokerage platform that is easier to use than this. I'm on Thinkorswim, I'm on Fidelity, I'm on Webull. Where else am I on? Things to like about all those platforms, but for whatever reason, I just cannot get my head around their screeners. I think they are hard to navigate. This one I think is a little easier. So why don't you walk us through how you would use this, Aaron? Because you're the one that wanted to bring this up. You said you wanted to look for 52-week highs. Is that what you said?
Yeah.
Okay. So I'm just going to pull up every single filter here. This is all the filters that we can filter by. And I'm going to scroll, and you shout out when you find 52-week highs and lows. That is what you wanted, right? There we go. It's on the left-hand side. So, all right. We want to find stocks that are what? Like what
within like a 10% range of their
10% range. That's a lot. That's a lot. All right.
I know, but well, here's why I want to do it this way, and you can set it tighter.
Yeah.
Right, within like a 5% range of the 52-week high. But a lot of times, some of these stocks that are at 52-week highs will get up to that 52-week high and then sell off for a day or two where they're down a few percent. And those are a lot of times like the best times to get into those stocks when a stock is in an uptrend and then has the little pullback.
Okay.
You don't want to see it crash down, but
that's fair. So okay, I'm gonna go 10%
down,
down 10%, right? Any other thing? Should we filter out like the crap? Should we filter out like super low priced, low small?
Yeah, I typically always do that.
All right, we're gonna go market cap, and we're gonna go plus mid, or we're gonna go plus small. We'll do plus mid. How about that? All right, cool. You want to sort by percent change today?
This isn't go. How was Facebook popping up? Facebook shouldn't pop up.
I just changed the. Oh, you're right. Well, that was weird. You're right. Wait, what did I do wrong? Wait.
Oh, you said 10.
Wait, hold on.
You said down more than 10%.
Yeah,
we went down less than 10%.
Sorry.
Yeah, I was taught the things in school, like the arrows indicating greater than or less than. It's like a fish eating the. You know what I'm saying?
Wait, what the? Can I not read here? Hold on. I set it down less than or equal to 10%. Is that not what that says?
That's saying 10% is greater. Yeah, 10 down less than or 10%. Is that what you had the first time?
Yeah, that's what I have. Unless
this isn't a good product demo. We're messing something up. This is 100% user error and not a problem within the platform.
All right.
Let's try up. Yeah.
No, that's not what we wanted to do.
Okay, well.
We didn't want to do up.
Can someone who
knows math come on and help us save this segment? Jeez Louise, we're totally butchering this.
Ooh, that's interesting. Zen Bullish. Oh, okay. I've got a question for you, Spencer, because I knew this right away, but I'm curious if you do. I saw a thing on ESPN yesterday that said if Joe Burrow wins the Super Bowl, he'll become the first quarterback that was a Heisman winner
and a national
championship and a Super Bowl winner.
No, he wouldn't be. He'd be the third.
No, first quarterback.
No.
Oh.
There's been two more.
Wait.
Oh wait, Heisman.
Heisman. Maybe it was Heisman national championship.
Yeah, there's been two. They're both named Joe.
Who? Joe Namath? Joe.
Unless I'm thinking of something different. It's Joe Namath and Joe Montana. I thought, but that might be a different stat. Hold on. What are we doing here, Aaron? This is not my day, guys. Chris is about to correct us again. I feel like that's all Chris does is correct our mistakes. What am I even doing? I don't want to do this. All right, this is not my day. I can't do anything right today. I can do nothing right today. This makes no sense. I'm sorting it. I want to see anything. Is that not how this is supposed to work?
Okay, Namath did not win a Heisman.
Forget it. I don't care anymore. This whole segment is just total. Hey guys,
Montana also did not win the Heisman.
All right, so then what was the stat that I saw? It was the stat. It was
first overall pick.
Yeah,
to win,
maybe first overall pick.
Which that makes sense because I thought that was weird too. Like, how come more first overall picks haven't won the Super Bowl? Like, they're supposed to be like the best player, but the first overall pick goes to the worst team. Yeah, so Chris Kaji said first quarterback to win all three if the Bengals win. My question was, who's the non-quarterback to win the Heisman, National Championship, and Super Bowl? Because I knew this right away. I was like, oh, I know who that is.
Charles Woodson.
Maybe.
What do you mean maybe? You don't know the answer to your own question?
Well, I know one. Charles Woodson. I know Charles Woodson won a Heisman, right? I know he won. Did he win a national championship?
I don't know. We got Joel in the office right now. We can ask him. Joel.
Oh, Chris is saying yes, but I had another one, a Michigan guy.
What? Oh, Chris is what? Okay. Are you gonna tell us eventually?
Well, actually, now I got to fact check it.
All right, dear Lord, what is going on today? Hey, remind us. You know what? Actually, maybe we should do this right now because if we don't do it now, we might forget. We promised people to enter the Rocking Mortgage Squares contest today. So I want to do that before Tim comes on. Wesley says it was the soup. Wait, Packers.
Oh yeah.
That was the Steelers.
Okay, wait. So Charles Woodson won
Hold on.
national championship too.
Wait, is Wesley giving us a hint right now? He's saying
No, I think he's just saying that's when Charles Woodson won the
okay.
Super Bowl.
Makes sense.
So I was thinking of Desmond Howard, but I don't think Desmond Howard ever won a national championship at Michigan. But he won not only did he win the Heisman, but he won the Super Bowl and Super Bowl MVP.
He did?
Yeah, Desmond Howard.
With
as
who?
A special teams player.
With who?
The Packers, I thought.
I didn't know that. Anyway. Oh, Chris has 2 running backs. Wait.
So we have 2 more running backs.
Wait. So the question was what again? The question was Heisman Trophy,
national championship,
Super Bowl,
and Super Bowl.
All right. So if 2 are running backs, then I would say, hey, not Barry Sanders. Let's go with like. What was I was just watching a thing the other day.
Yeah, so I think Desmond Howard was missing the national championship.
Is Tony? I wonder if Tony Dorsett is the answer it was an answer here, or maybe I don't know. That's all I got right now.
Wait, Quantum's asking where's the swag. Quantum, are you asking where's your swag?
I don't know. I'm wearing some Benzinga swag. I'm wearing a polo right now. I wear a polo every. No one's noticed, I don't think, that I wear the same shirt every single Friday, but I have more than one, just so we're clear.
I also have a bunch of those.
Hey, wait, I got one. Chris says it's Tony Dorsett. I got one.
Born to be Free saying Emmitt Smith is the other one.
Oh.
What about Mark Ingram won the Heisman
And
definitely won a national championship, but I don't think he's ever won a Super Bowl.
He's not won a Super Bowl
because he's been on the Ravens and the Saints primarily.
Are you giving?
Quantum. We are giving away swag day. We're gonna do a guess the chart. And
that's who I was thinking of. Dickerson. Thank you. Is it Dickerson? No, because he didn't win a Super Bowl.
No, I don't think. Yeah, I don't think any of those Rams team ever won a Super Bowl.
They made it though. I don't think they won. But that's who I was thinking of. Eric Dickerson. That's who I couldn't place. Thank you. Reggie Bush. Don't be wise ass. The ghost. Reggie Bush didn't even win the Heisman. Check the record books. He ain't there. If he ain't there, he ain't there.
All right, Chris Kutchie, give us the final answer. Dorsett and who else? I thought when I read that headline, I was like, oh, they're saying first quarterback because of Desmond Howard, but I guess I didn't realize that Desmond Howard never won. They must have been close to winning national, back in those Michigan days. I don't know.
All right, can we the Benzinga Pro screener segment? We totally butchered that.
We're going to get with the pro guys and figure out what we were doing wrong to...
Clearly, none of us could figure it out. But what I want to do before...
But there are other options or other ways to find hot stocks other than just running that screener.
Yeah, so I mentioned one. I mentioned the scanner, right? So let me bring my pro back up. So I use the scanner tool every single day during market hours. Where's my scanner? There's my scanner. You can see I have 4 scanners open at one time. I have actually because I refreshed, so I have to. This is how I have my screen set. This is my normal setup. Okay, I've got on the top left. I look for the top gainers from the open. Oh, I'm sorry, I'm sorting by the wrong column. The open. I have to load my. Oh my God, nothing is working for me today. What is going on? It's not my day at all. Sorry, guys. All right. Top gainers from the open. That's what I look at on the top left. The bottom left, I look at top losers from the open. It's the change percent open column is what I'm adding here. Okay, so I've got top gainers from the open, top losers from the open on the left side of the screen. The right side of the screen, that's normal. This is what I always have. I have the 5-minute gainers and I have the 5-minute losers. So, and that's what I look at throughout the day, right?
So if you guys have a way that you like to find hot stocks, let us know.
I don't know. Luke is signaling to me right now. I don't know what he's trying to say.
My other more recent, which I've pulled this tool up on the show before. I like looking at the insider trades because a lot of
I
times
know you're a sucker for the insider trades.
well, I'm a sucker for the insider buys because sells, we've talked about this. You can't read too much into the sells, right? Can be part of a predetermined plan, can be tax purposes. Maybe they just want to buy a new vacation house. They have nothing against the company. They don't think, oh, the stock's going to go down, so I'm selling here. Maybe they just want to free up some cash. But when you see people buying, you typically only buy for one reason, right? And that's because you
have
think
too much money.
Well, that's a yeah. I mean,
That's not what you were gonna say. That's
could be a tax thing. So let's just do this past week. So we'll do 02, 04, 2022, 02. And really, Spencer, I mean, this is where my kind of ears perked up for Asana, and then Asana ended up making that.
Yo, can we pull up that Asana real fast? Let me pull up that chart. Aaron's been pounding the table with both his fists and his feet on Asana the last month? 2
Why
months?
did you guys bring it up on pre-market prep or something too?
No, it's just you. Let's go to it daily. It doesn't do it justice. Because the thing is, with a lot of these stocks have been rip that had a rip for a couple of days or whatever. Those gains were very short lived. Asana has actually held on to these gains in the last week or so, which is notable.
Oh, wait, hold on. Before we keep going, can we scroll back up on the chat real quick? Jay Rice just asked a nice trivia. Oh, wait, someone already guessed it?
$5. Wait, I didn't see it yet, though. So $5. What NCAA Division I team won the most golf championships?
I'm going to say Stanford.
That was what I was going to say.
That's only because I know Tiger Woods went there. My second guess, and I know Jay Rice is an Arizona guy. I'm gonna go ASU, Arizona State.
Wait, what's the answer? Is it Georgia? What?
I think we got it right. We said it at the same time. So Jay Rice, you owe.
No, he says.
Is Yale the answer?
Yale?
No way.
Oh, I stand by my answer. I like my answer better. Yale.
Wait, Hex Pony is saying Asan the gap to 89, but are those laughing emojis?
Oh, we're talking about two different things at once right now.
You gotta keep it. You gotta keep the.
So okay. We know that stocks tend to fill gaps. They don't have to.
Oh wait, was it OSU or Yale?
Dude, what the fuck is going on today?
Ricky Fowler went to OSU.
What is going on today? Luke Jacoby just hijacked producer Rohan, the guy who's in charge of making sure that this show functions, and they just went out for lunch. So we're flying blind here right now.
Wait, they went out to lunch?
Yeah.
Are they gonna bring us something back?
I don't know. Okay. Enough with Asana. Bottom line here, Aaron likes insider buys. I like using the screener or the scanner of Benzinga Pro. I want to do the Rocket Mortgage Squares thing now because if we don't do it, we're going to forget. Okay? So this is what I'm going to do. I'm going to share my screen. I want to do these squares. Pronto tanto. So I'm sharing my screen right now. We've been talking about this. It's the Rocket Mortgage Squares. You can go to rocketmortgagesquares.com. I'm going to enter my email. I don't care if y'all see it. Jason has put my phone number out there before anyway, so whatever. What are my home ownership goals? I'm interested in buying a new home. Yes, but not this very... Well, I guess I should say I'm not currently. I want my information. All right, let me stop my sharing for 1 second. I'm going to enter this information. Wait, are we allowed to enter this? Do you know?
Yeah, we can enter the outside one and the internal one.
We can? Okay.
I think today's the deadline to enter both, though.
That's why we're doing it. All right. I'm not a robot. Wait, am I a robot? It wants to know if I'm a robot. Okay. I'm in. It's time to pick your squares. Every time the score changes, wouldn't it suck if it was 6-3? We'll draw one lucky player to win $50,000. So choose wisely. All right. Okay. So we got the Rams on the top, on the x-axis, and the Bengals on the y-axis, right? So each of these squares they're randomly assigned. Do you always do it like that, Aaron? The random assignment, or do you?
In the past, when I've played squares, I've picked.
So yeah, like yeah, I've done it both ways. I don't really have a take on which way is the right way. So basically, if you've never done this before, if you want to play along with me, each of these blue squares and red squares they're going to get a random assigned number between 0 and 9, right? And it's going to be 0 through 9, 0 through 9, but it's not going to be in order. It's going to be just random, right? And those numbers will represent the last digit of the score after the first quarter, the second quarter, the third quarter, and the end of the game. So, for example, let's just say like this top A here, let's just say that number is 0, and then the top N, that number is, I don't know, 2. You pick that square right there on the top left. You're saying, okay, I'm saying that at the end of the first quarter, the Bengals will have a score that ends in 0. The Rams will have a score that ends in 2. And that's basically how this works. So I'm gonna pick some squares. I'm gonna do that square, but it's random, so we don't know. So you just have to just do it. Wait a minute, I only got one. Wait a minute, I only got one square. Can I get more? I didn't read the terms clearly. Oh, you only got one. You gotta share it with your friends. Wait, no. Oh wait, yeah.
Yeah, copy the invite link and put it in the chat. Maybe I'll get some more squares.
You all want to help me out with some more squares?
Well, you get an extra square too, I think, when you sign up through Spencer's link. Someone asked what we think about Rocket stock. So before I talk about it, just to be candid, I don't even know. Do we kind of partnered with Rocket?
Well, we're in what's called the family of companies. So
Well, we're not, I don't think, technically anymore. I'm not sure.
No, you're right. We're not technically. Well, no, we still are. So, just for full transparency's sake, Dan Gilbert, who was the founder of Quicken Loans and parent company Rocket Mortgage, he was an early investor in our company. We're not a part of Quicken Loans. We're not part of Rocket Mortgage, but a few years ago we moved into their building because what Dan did was he created this thing that he called the FOC, the family of companies, where basically any company that he owned or invested in or whatever, he was like, yo, you guys should just work together on stuff. I'm just going to like give you guys tools. Like we have a database that we can search for any employee at any company in the family. So I'll give you an example. A few months ago, I needed a notary. I went to this tool and I was like, hey, I just searched for the word notary and I got like 1,000 people because there's like 1,000 notaries at Quicken Loans. But bottom line is like Dan was an investor. He's not anymore because we have new owners now. Shout out Behringer Capital. But we are in their building and their offices are like a few floors above us. But we don't work for them. They don't have any say in operations
the Ghost
here.
is asking about Rocket stock and ticker RKT, and I just wanted to kind of clear that air before we talk about it, so you know that it's not like we're not financial partners with Rocket right now, but there is that relationship, there is that
Jason
like friendliness with Dan Gilbert,
definitely.
But with that said, regardless, I mean Rocket stock at this point, I think it's gotten so beaten down,
garbage.
It's undervalued, right? Someone mentioned, I don't know if it was you in the Ghost.
I'll be honest. I do not, and I'm not trying to punt for real. I really don't understand like the mortgage industry, like at all.
Well, I think just from a fundamental
Like,
standpoint, I mean, the Rocket stock is now down to below a 6 PE. I mean, the company, it's a $25 billion company. The company makes money. So I don't dislike that play, looking at leaps on Rocket. Again, I think there's value there. I think, at $12.30 Rocket, I do think that, there's value in that play right now. With that said, you look at the chart. The chart's really ugly. Of course, Rocket had that kind of run up as part of a meme stock, and then has since gotten battered down. But yeah, I don't hate the idea of kind of starting a position in Rocket here. And again, I just think it's fundamentally undervalued at this point.
I don't know. Wait, when do the earnings come up? That's a good point. I honestly don't. Joel would know because Joel's like side hustle for a long time was in real estate.
Was a mortgage guy.
Yeah, Joel's a real estate guy also at heart, but like I don't understand why why the stock would not be booming. And I get it that the housing market I know it's slowed a little bit in the last 6 months, but the year and a half prior, and I get it that rates are low. I don't know. I know the refi business was like booming. They refied like half the country. Maybe that's the problem. Is everything got pulled forward, right? They refied half. There's no one else to refi. Maybe. I don't know. Thank you, Born to Be Free. Maybe Tim Quast knows about this. At the very least, I do want Tim Quast's insight into the supply and demand of RKT because it's a head scratcher to me, and I'll be the first to admit that I don't have a great fundamental understanding of this business. But hey, let's bring Tim Quast on the show. MarketStructureEdge.com. He is their founder and CEO, and he gets our special intro. Oh, Timmy, what's up?
That's impressive. Who did that intro, and how do I license it?
I don't know. Wait, Tim, what?
It's really, yeah, that's dramatic.
Tim, am I barking up the right tree here when I say that like half the country refied their mortgage in the last 2 years, so there's no one else to do it?
Well, I haven't looked at the fundamental data. You know, it's not, but we can talk about.
Yeah,
I think what you said about pulling forward future consumption, which we've been doing for 2 years. I don't know whether everybody. Look, you can continually refinance if the value of your property continues to rise, and you want to pull some equity value out of it, which is a very popular thing to do in the United States. Right, it's a great way to do a remodel. You can do all kinds of things with that money. So I don't know that cycle is over. Yeah, to me, there's a larger issue that will affect Rocket and stocks like that. Clearly, it's a very well run business. They're very intelligent when you listen to how they describe the way that they run their business. There's no question that it's a well-run operation. But the reason you have me on is because that doesn't necessarily.
Can you share your screen? Can you share your screen, please? I want to see what the Rocket situation looks like.
Right. I mean, it doesn't matter how awesome the fundamentals of a business are if the supply-demand equation doesn't support higher prices. And the same thing applies to an economy. It doesn't matter how great you think the economic fundamentals are if supply and demand are out of whack. And it happens.
Here we go. All right. Okay. Screen's up. I see it.
So here is a 6-month view of the supply-demand characteristics of Rocket. So for those of you who don't know Market Structure Edge and market structure, it's a jargon term, but it means the behavior of money behind price and volume in context of rules. Physics govern the way that we function on this planet, and supply and demand, as in any market, determine how the stock market functions, and there are a set of rules, and there are behaviors, purposes, and time horizons. So the more time that something spends above 5, the more likely you are to get gains. So when Rocket was spending significant time above 5, here's gains. When it drops below 5, don't own it. When it's above 5, own it. When it's below 5, don't own it. And that is a fact. Those things will change. And then you would say, well, why is that? Why is it that there is more demand at some times and less demand later? By the way, there was a real breakdown in supply and demand all over the market at November options expirations. I was just sharing some data on SPY with some folks and our internal team, how at November options expirations in SPY, a lot of money came out. And then the market imploded around Thanksgiving. Well, the event had already occurred that caused that. So here's the thing to remember about Rocket.
Dude.
like every company, they're owned by stock pickers, they're owned by indexes and exchange traded funds, they're traded by high frequency traders, and they're leveraged for the purpose of derivatives. And all of
Wait,
those
Tim, I'm sorry. Tim, we're having Tim, what is going on? Why is CNBC on the screen? Aaron, what are you doing? Oh, we're back. We're back. Oh my gosh. I'm sorry.
Did we get it
Tim.
sorted out? No worries.
Yeah. Our the video feed of Aaron and I was replaced. I didn't change it. You changed it. whatever. All right. We're back. I'm sorry.
Good thing it's Friday. Good thing it's Friday. So I could boil this down to you very simply. Demand has been falling since the end of October, and supply has been rising. And it doesn't matter how great the story at Rocket may be, those conditions are going to undermine price. And you would say, well, why is demand weak? Well, once prices begin to deteriorate in anything in the market, then the allocations in models, if I'm allocating some of my resources to financials, and mortgage REITs are different from other REITs, by the way. And I decide, well, I'm just not going to allocate as much to those, and I'm going to put more into AbbVie and Johnson & Johnson and so on, and models that are low volatility. Over time, that's going to deteriorate the market. And on the supply side, everybody who looks at the underlying trading data and says, well, is there demand for this stock, will shift short. And we can see those things happen over and over and over again. So that is why Rocket is doing dismally. Whether it has anything to do with the business or not may be irrelevant. A lot of that is true about the stock market. We talk all the time about what fundamentals drive the equity market, when in reality, less than 10% of the trading volume in the equity market comes from stock pickers. So it's everything else. We should spend 90% of our time talking about what actually drives stocks up and down. And most of the time, it is not buy and hold money.
All right, Tim, I got a random question for you. Oh, it's not that. Okay. Oh, it is a little random. Someone tweeted at me like a month ago. They tweeted at me this question. I don't know if that person is watching right now, but if they are, I thought this was a question that was up in your wheelhouse. I answered it. I tried to answer, but I figured you would have a better answer. And the question basically came down to, hey, I see Cathie Wood buying a lot of stock every single day. She's selling and she's buying, but she's doing a lot of buying. Where is ARK Invest getting that money from?
Very good question. And
it's not my question. Not my question.
It gets to the whole mechanics of exchange traded funds, and I know that you winced because you think, ooh, I hate to get us running down a rabbit hole around exchange traded funds.
No, I like the ETF rabbit holes. I do, Tim.
Okay, well, and I'll try to keep this as simple as possible. So exchange traded funds do not work like mutual funds. Let's first understand how mutual funds work. Then we'll talk about what Cathie Wood does when she is attracting investment flows or when they're leaving. So mutual funds, under the Investment Company Act of 1940, pool fiduciary assets. That is, if I'm a Vanguard index mutual fund customer, I have a customer record at Vanguard, and I send Vanguard a check, and Vanguard becomes the fiduciary who must deploy the money that I sent them according to what I desire. And let's suppose it's IVV. Is that right? Is it IVV? I think that might be BlackRock. Anyway, is it VNO? Whatever the big Vanguard S&P 500 fund is. So then Vanguard will take my money and go and buy the stocks according to the model comprising the S&P 500. And because it's a fund, it can only be priced once a day. Under the law, under the 40 Act law that creates these open-end funds, we can all only get one price per day. And so it would be priced once a day, and you need the reference price for all those stocks at the end of the day. But the point is, there is a fiduciary responsibility to deploy capital and to shepherd my interests because I have a record at Vanguard. Now, let's contrast that with an exchange-traded fund. An exchange-traded fund sells exchange-traded shares to Morgan Stanley or whoever the authorized participant is and the distributor for that exchange-traded fund is. And the ETF shares that you buy, if you buy Cathie Wood's ARK fund, where is your customer record? Well, it's not with Cathie Wood. Cathie Wood has no idea who you are. Your shares reside in your brokerage account. And what you own are ETF shares that trade like the stuff that Cathie Wood owns. But Cathie Wood does not manage your money. Morgan Stanley manages your money if you own those exchange-traded funds. It is a big distinction. And it gets to how ETFs are created. How do more ETF shares get into the market? And if those ETF shares become too great because the market goes down and now we need to remove ETF shares to get the ETF's price back in line with the stocks, well, the Morgan Stanley's going to gather up those ETF shares and return them to Cathie Wood and say, here's a bunch of ETF shares. Now give me an equal value. If this is $1 million of ETF shares, according to the average price at the moment, that I have given to you, give me $1 million of stock that you've got. So, and what will I do as Morgan Stanley? If I know that ETF shares are being removed from the market, I am going to short both. I'm going to short the stocks and I'm going to short the ETF because I don't have a customer there. I'm just Morgan Stanley making markets in ETFs and stocks. By the way, that is all very measurable. Look at this. I'm just going to show you some data on, this is SPY. I'm going to zoom in a little. That's too much. Let me zoom that back out a little bit. I just want to point something out here. That at December 17, this was when December options expired. Look how much of SPY was short. SPY is this largest traded ETF, oldest and largest ETF. Almost 75% of the ETF shares were short in SPY because all of the broker dealers making the markets for everybody from Cathie Wood to whomever knew that money was coming out of the marketplace. So they're shorted. And when did it bottom? Just before the whole market did. So that is because of ETFs.
Wait, hold on. Sorry, Tim, to cut you off, but we're getting some audio issues on on your end. I don't know if do you mind trying to switch your audio input?
If I unplug this mic, it may or may not be as good. So, and part of it is
let's try it. Let's try it.
In Steamboat. Okay, let's see what happens.
All right, now you got to unmute on the site.
Okay, can you hear me?
Yep, can hear you now.
I don't know if it's going to be any better, but I'll go back here to what for the moment. Okay.
Yeah, for the moment. So, I'll let you talk because when I talk, there's an echo, so I'll just shut up and let you go.
And I'll finish this thought, and it's a very important question. So Cathie Wood isn't taking fiduciary customer assets and buying stocks with those assets. She is selling ETF shares to brokers, right? The brokers then turn around and sell it to you. And she gets money for that she can use in a variety of ways. She'll invest it in the stocks that she's pursuing, of course, but it's not the only thing that she will do with those assets. And how do I know? What? Because I read the regulatory documents. You can do it too. Read the prospectus, read the statement of additional information, and it will describe the many ways that an ETF sponsor is what you would call her.
Yeah, we're breaking up again. It was better for a second. Now we're breaking up again. I don't know if it's a connection issue. Well, let's try going back to the original mic one more time, and if it doesn't work, then then it is what it is.
Okay.
People are saying in the chat, they're saying it's you're a connection issue, internet, not anything on the actual audio. So.
I think that's what it is. I'm in Steamboat, and you get what you get up here in the mountains, and sometimes it works, and sometimes it doesn't. So we'll do the best that we can.
Knock on wood. I'm not going to jinx anything, but we're good right now.
Okay, good. Anyway, we've answered the question. Yeah, I just think it's very important to understand that with an ETF, you own a substitute for stocks. You don't have a fiduciary relationship with Cathie Wood. She's going to invest in things as the prospectus says she can.
Yeah,
Okay,
and I
did I
mean,
lose you? Okay. Yep.
yeah, no. I mean, at the end of the day, Cathie Wood's put herself in this position where people are going to be watching what she does. What I think is, speaking of Cathie Wood, I mean, DraftKings was always one of her big stocks. DraftKings is making a nice move right now, up 10% over the last week, 6% today. But this was a stock that got like so beaten down, and I don't know if it's just timing wise that the stock got so beaten down that buyers started to come in, but it's also the week leading into the Super Bowl. So I think it's on some people's radars. Like, oh, if we get some great numbers, that could be a catalyst. Saying Zen Bullish in the chat saying Super Bowl betting is already estimated over $7 billion. So if we end up getting some numbers out on Monday or Tuesday of next week that say, oh, the amount of money bet on the Super Bowl on apps like DraftKings was way higher than expected, that could be a catalyst. But to me, it's one of those things that the market should have priced in, right? That, okay, people are going to bet on the Super Bowl more than your average NFL Sunday. But so I don't know if it's just coincidence that DraftKings is making this move on this week, that heading into the Super Bowl. But it's on my radar, so I'm curious what the market sentiment looks like.
Well, that's probably one of them. And then think about context. Options expire next week, the 16th, 17th, and 18th. So if I'm going to buy calls and then buy the stock in the hope that the presence of my buying pushes up the value of the options so I can sell them to somebody else by next Thursday, that's going to contribute. And I can see that is exactly what's happening. So notice that the demand side is above 5. It's come off of its peak, but it's still well above 5. And look at the supply side. This decline below trend right here for short volume tells us that there are modest long bets. They're not huge. They're not huge long bets, because otherwise these levels would come all the way down to about 30%. But that is what's happening, AB. There are sophisticated traders who are betting that the value of options on DKNG are going to increase into expirations next week.
Yeah, and I mean, maybe before we leave, we can just take a look at the SPY, the overall market. We do have only about 7 or 8 minutes left. Another stock from the chat that well, here, if we want to do SPY real quick, we can do that. But another stock in the chat that I was seeing was Zim, which is a shipping service. And I was looking at the chart. I mean, this stock hasn't been around for that long. It looks like listed at the beginning of 2021, so just over a year. But looking at the chart since this stock opened, I mean, literally all it's done is just gone straight up. There hasn't been, I mean, there's been a couple dips in here, sure, but it opened at, let's see, around like $12, and it's up to $74, and I mean, the chart just looks amazing.
Yep. And look at the supply demand equation. So above, it's spending a lot more time above 5 than below it. And on the supply side, the trend continues to go down. If you have declining supply and steady or rising demand, price is going to reflect it. And with Zim, you would once again, don't own it when it's below 5. Anytime that it's below 5, the price isn't going to perform well. Back above 5, own it. Below 5, don't own it. Above 5, own it. Don't own it, own it. And as long as it's staying above 5, you stack those gains, traders. There's a remarkable difference in keeping gains and avoiding the declines. If you can do that each time, it is far better than buying and holding. That's the whole point of trading market structure. But yeah, it's really quite something. And I should tell you, Zim is a customer it uses our data analytics to understand what drives price and volume on the corporate side of our business.
Yeah. Again, so this is one that I'm not I'm not in or anything, and I honestly haven't been watching it. I know we talked about some other shipping. I brought up DAC, which is in the same space a week ago as an earnings play. But I mean, like I said, the Zim chart just looks so strong, and I don't see any of these trends in terms of what's going on in the shipping logistics world of changing in here in the near few in the near future. Jay Rice is saying Zim is still cheap, even though it's been on this incredible run. So we'll have to keep checking it on the.
Right. I don't know if it is from a fundamental perspective, but traders, this is what you can use this to know what institutions are doing. If you get to the end of a quarter, and it was really good here, and there's a lot of short covering, it tells us that in all probability, in the next quarter, the stock's going to continue to perform well. I mean, we had some trouble in the market at the transition from the third quarter to the fourth quarter. Here's September 30. But that will tell us if you see the huge amounts of short covering, short volume dropping way below trend, you know that stock continues to be favored by institutions, and you could apply that anytime to any situation. You know, an example of that to me right now is BHP Billiton. You know, it's an Australian company, so you're trading an ADR. But the fact that the demand side is so strong and the supply side continues to fall, and I mean, our short volume levels are at 30%. That tells me there are very strong long bets on BHP and commodities into options expirations next week. May not last longer than that, but those are things you can constantly use to understand what large institutional investors are doing. They don't know that we can see the supply and demand and know which direction things are going to go. Broadly, back to that point, AB, so the market trades between 4 and 6 on a 10-point supply-demand scale. So generally, when the demand side of the market is way above 6, statistically, this is a fact. At 6.4, levels at 6.4 and higher from January 2021 to present, the market has lost cumulatively 3.1%. So what would that tell us? Well, don't own the market above 6.4. Well, where is it today? It is 6.4. That's where it is. See that? Doesn't mean individual stocks aren't going to do fine, but it does tell us that statistically, the market will not produce more gains sustainably until we have a reset to sentiment, which will probably occur after expirations next week.
Okie dokie. All right, so real quick in the last 3 minutes, I don't know if we've touched on overall market yet. So if we want to just do SPY real quick, I think that'd be helpful.
That's it. We use SPY as our proxy for the market. So this is SPY, and this is demand. So when demand drops below 5 or 4, that green line tends to mark a bottom. When demand rises back up to 6, and we're just using SPY as a proxy, then we can expect that the market's likely to decline. And remember, I showed you data that indicated that about in here, right during options expirations in December, it's a leading indicator. Short volume was 75%. It was 75% in SPY. Well, what is likely to happen if demand is peaked and supply is very high? Well, the market's going to go down, and it went down very dramatically off those levels. So you always want to know what supply and demand is. It's so simple. You have two variables. You watch supply and demand. You don't have to know what everybody else is reading, thinking, what the trends in shipping are, all of that stuff, because somebody else is doing that for you already, and their behavior will be reflected in supply and demand.
Well, there you have it. All right, Tim Quast from Market Structure Edge. Go check out the site if you have not already. If you haven't signed up, you can sign up for a 2-week free trial. I believe there's a code for Benzinga or something on there as well.
Name and email. I mean, you can test it just name and email. You don't have to put anything else in for 2 weeks. And then if you decide then to use it, then you can get a special discount. But it is so easy. You could just try it out. You don't have to give anything more than that, and you can find out if supply and demand work for you. I use it. That's the only thing I use, and I've talked to our users all the time. I did a live demo yesterday with a very engaged group of folks who fired a bunch of questions at me. I do it every Thursday.
There you go, Tim Quast. He's the man. If you like market sentiment, you want to learn market structure, you got to go to Tim Quast. You got to go to Market Structure Edge. And Tim, I don't know how long you're going to be in Steamboat for, but I'll be in the Rockies next weekend, President's Day weekend. So,
will you? We're up here for a month. We've got Winter Carnival this weekend, Winter Wondergrass coming up February 25th through 27th. It is a bluegrass bonanza, and we're going to be up here for all of that. Plus, I've got to lose all that weight I gained eating our way through Texas a couple of weeks ago.
Oh, there you go. Yeah, that sounds awesome. I love me some bluegrass. Maybe I'd have to come check that out. But I'll be in Breckenridge. So I'll hit you up if you
Good.
find yourself in the
Good.
area. We'll meet up for a beer or a bite to eat or something.
Send me a note. Would love to see it. Wood Brothers, Lucas Nelson, Trampled by Turtles, Leftover Salmon, all kinds of great bluegrass bands up here.
Awesome. All right, Tim.
See ya.
I'm looking forward to coming out to Colorado. So I'll maybe see you in a week or so.
Sounds good. I'd look forward to it, AB. You guys have a great weekend.
You do the same,
See you,
Tim.
Tim.
Thank you.
All right. Apologies for whatever audio issues we were having with Tim's audio. I honestly think like Rohan's computer, which is what we run the show through, needs a hard reboot. I don't know what's going on, but we powered through. Someone gave us the best compliment before. Did you see the comment about Benzinga? It was from before Tim's segment. Said I think was it Zippity or Zen? Benzinga is like a box of chocolates. How good is that?
Like from the Forrest Gump quote?
Yeah.
Yeah, I don't know.
You really do never know what you're going to get with us.
I don't know if that's a compliment. But
I'm taking it as one. I choose to believe it's a compliment. All right. Let's bring on Tony Benson. Patterns in the Flash. We got some patterns? I don't know. That's an open-ended question. Tony!
Hey.
What's going on, man?
How you guys doing?
Doing fantastic. It's Friday, and it's raining, and we've had a day of technical glitches, but we're powering through. The market's green, or was last I checked. How's your day going?
Pretty good.
All right.
It's raining here too. Nothing new in the Northwest.
Wait, you're where are you again? I know you're Mountain Time.
Seattle area.
Oh, wow. Okay, you're Seattle.
I'm south of Seattle ways, but
anyway,
yeah,
doesn't it always rain?
I was gonna say we can't complain about the rain.
I know.
Tony, because he's got rain every day.
Yeah.
Yeah. it's always gray.
Let me just say on the Seattle note, I watched, for whatever reason, we decided to watch Sleepless in Seattle last weekend or 2 weekends ago. Not a great movie. I'm just gonna go ahead and say not that good, but whatever. Okay, Tony, can you share your charts? Oh, I see you already did that. Thank you very much. Let's bring them up on the screen. What are you watching today?
Well, the thing I'm watching right this minute.
The market's red. I apologize. See, it was green, and then we reversed on us. Sorry.
Why are you apologizing?
I don't know.
Well, you know that I'm bearish, right? So I like it when the market's red, at least right now.
Yeah.
No, I've got just a small day trade on Microsoft right now, so that's what up in the upper right corner there I'm watching. So, but
what? So I'm sorry. You have a small trade on what?
Just a quick day trade. I added it. Actually, I already have a bearish put position on this on Microsoft. This is Microsoft.
Okay.
And I added to it this morning, and then I was going to pull the trigger right below 300. Actually, it's about ready to trigger out, but that's fine. So yeah, the downward momentum is just there, and I'm looking at it adding to the swing trade, which I have some puts on. And then this morning, as it danced, it came down here, broke 300 a couple times, and I figured if it broke 300 again, it would probably continue to fall. Kind of my thought process.
Okay.
So
why'd you think that?
Just the momentum. I mean, you can see the downside, the volume that we have. Yes, they obviously gapped down and then it sold off. Then having just an overall bearish sentiment, the market is, at least in the short term, in a downtrend.
Yep.
And then this morning we sold off here with quite a bit of momentum, quite a bit of volume, and now it's just dancing there. It's bounced a couple times, dropped off to about 299. It's broken the 300 level. So I figured if it breaks 300, it's probably going to continue. It's not going to go back above it. And I figured if it does, it's going to cost me, I only have a couple hundred shares. It's going to cost 150, $200 to find out. If it tanks today, I make anywhere from 500 to $2,000, or I lose a couple $100. So I figure it's worth throw a little risk at it, just on a quick short-term day trade. So
you like to see a risk reward where there's more reward than a risk. So
correct. I use at least 3 to 1. So
okay.
But that's what I'm watching right this second. So that's on the top of my radar.
Wait. What's strike on that again?
What's that?
What was the strike on that?
The strike?
Yeah.
Oh, on the
Microsoft.
The options I have. Let me double check. I think it's the 280s. But that's going out to April, so that's a couple of months out, which is usually shorter term than I go if I play out of the money bet.
Okay.
But with the market the way it is, what's that?
So that's the only trade out you got on today, right?
As far as the day trade, yeah.
Yeah.
Swing trades, I've got several.
Yeah.
Actually,
let's talk through those.
Everything else on the screen, I have bearish positions on. So, BX, we'll just pop. We'll make each of these big. This one I've been kind of in and out, and I get in and out of a lot of stuff. In fact, you know what? I think it'll be easier. Let me bring them up on here. Now we'll start here. Apple.
Okay. Yeah,
so Apple, we got there's a little miniature head and shoulders there, and it rallied back up here. It's tapping the neckline, and it's been doing this. And I've been in and out of this. I've been trading just little swings. I've got these little swings in and out. Like yesterday, I loaded up on some. I got out of some yesterday with a little profit. And then if it continues to fall, if it drops down here to the target of 157, then obviously I'm in pretty solid shape. So,
okay.
Any questions on that? I didn't see the chat up yet.
Chat's talking about all sorts of things. Chat's talking about gold. Chat's talking about we were talking about coal earlier. Chat's talking about ARK or SARK right now. Sorry, SARK, SARK, which is the inverse Cath ETF. Oh, that reminds me. I keep forgetting to talk about that ETF news I saw the other day. There was a filing. Filings don't necessarily mean there's going to be new ETFs out there, but a firm filed. Let me rephrase that. A firm, not the company, a firm, but an ETF firm. I forget which one, filed to launch leveraged and inverse ETFs for individual stocks, and one of them was Tesla. So you could, like, for example, like an ETF that does the inverse of Tesla, which they have those over in Europe, but we don't have that in the U.S. So I keep forgetting to mention that, but I thought that was fun. Anyway, wait, what is this now? This is
Target.
Okay.
Yeah, have a basically descending triangle on it. That's weird. So you're talking about doing an ETF.
Yep.
An inverse ETF. So when Tesla goes down, the stock itself goes up.
Yep.
Why not just short the stock?
Not everyone can do that.
Why not just buy puts?
Not everyone can do that.
I don't know. I guess it's coming from my mindset of being able to do that.
They have those. They have that kind of stuff over in Europe. Europe is way less. They're way more loosey goosey than we are over here about that stuff, about leverage. You can get like crazy leverage over there. Maybe someone in our chat who's watching, who's over in Europe, can speak to that more. But I don't know. I again, filing does not mean it's going to launch, but filing is the first step. So, the Ghost says it right. Puts are expensive. Not everyone can afford that. Not everyone has the margin account to go short. We'll see. I don't know. We'll see. But anyway, target.
Yeah.
Descending triangle.
Yeah. So basically, looking forward to break that 211. I mean, basically, we're just dropping. I mean, it's lower highs. We've got the same lows, basically double bottom there. Yeah, there goes Microsoft. So if it breaks down below there, the target's about 200. So I think it has a decent chance of dropping to there. So that's target. I mean, all of these are bearish plays. BX, this is another one I've been a big head and shoulders back here. Was looking for it. It bounced back up. This hangman right here. Let's see if I can make that bigger. And I'm always looking for patterns. And you get a pattern like this, a hangman up here at a resistance level that we've had before, about 135. And then you get the next day. I think I got some right here. I think I picked up some puts. The next day it jumps up, of course, and the second guessing yourself, but then I didn't close above my stop. So I hang on to it. The next day it drops off and I added to it. And
well, hold on though. So okay. What's that 136.87 line?
That's the stop. That's my stop.
So it did get above that.
But just intraday. I usually go off closing price. So I'm sitting watching it. And if it doesn't close above there, then I don't get out.
All right.
So it closed below it. So I left.
Wait. So are you getting out on the close, or how does that work? Or like the next day?
If it's above my stop, then yeah. Usually I'm doing it at the close. unless there's some indication that it's just gonna keep going, which happens sometimes. But if there's any inkling or anything that tells me that it may not stay above the close above it, then I'll hang on and wait till the close. And if it stays above there, then I'll bail on it. Is that clear?
Okay. I'm clear enough.
Okay. What other questions are there on this?
Well, I want to see. Wait, let me go back to my screen here. So the 136, and you didn't. So there's no action. You haven't actually done anything since. You're still in it. There's nothing's changed.
Not yet. I did close out of some yesterday. That candle that we have on the screen is today, actually. But yeah, I picked up, and usually I get into these. I'll pick up some and then add to it if it looks good. I don't remember what I just picked up part of a position here because there was a lot of momentum coming from that earnings announcement. And so I didn't want to be too heavy on it. And of course, the next day when it hit the red line, I was happy I didn't have a huge position because it wasn't that expensive. The next day when it gaps down, now it's a different story. Now I'm looking at this going, okay, we have an evening star at a previous resistance level. So we have another pattern, another candlestick pattern telling us that this upward trend is not likely to continue.
Okay, I have a question. When you have patterns within patterns,
yep,
what takes precedence?
Ooh, that is a good question.
Thank you.
I don't know that there is anything from a technical analysis standpoint. I certainly can't remember. I don't think there's anything that says one overrides the other, or one is more important than the other.
This has never occurred to me until just now.
Honestly, I've never thought about it either. That's why I'm sitting here going, that's a good question. I mean, I've been doing this 22 years, and it's like nobody's ever asked that question. I've never even thought about it myself. It's like, is there one thing that takes precedent? I mean, there are certain pieces of patterns or the way patterns develop that would make them stronger or weaker. I've actually done.
All right, Mitch says your own time frame will determine it. Mitch in the chat, maybe. I guess. Mitch
I see he's in there. So good old Money Mitch. What's up, Money Mitch?
Yeah.
I see you in the morning watching you.
He's studying for the CMT. I am not, so I guess he would know better.
Which level is he on?
I don't know, Mitch. What level are you on? I don't know if he's on a level. He's like me. I was a white belt. I didn't get very far. Karate. Okay, wait. Let's move away from the target trade here, which is still on. Let's run through the rest of these. So I see we got Home Depot. This is a bearish trade.
Yep.
What's the setup here?
This is this started originally back. That vertical line is where, and that's one thing I do. Those that subscribe to my tool, I do a pattern of the week. Usually I do one bearish, one bullish. But basically, I go and take my favorite pattern that I found that week, and just highlight it. Do a short recorded video. They get access to it. This is one I highlighted right there, looking for a bearish move as the market. We had a double top, and then it just tanked, that was a fun ride. Waited for it to bounce. And I figured right at that 365 level, we had some old there was support resistance that kind of ranged here between 365 and 361 back here. So I figured we'd pop back up to there. And about that 365 level is where I started. I think I just picked up one or two contracts of some puts and then added to it. I've been adding to it a little bit, and then it finally fell back. So, and that's what I do a lot. I'll start a position. If I think it's a little early, a little aggressive, I'll just get a little bit and I'll add to it if it looks better. It's one of those things that, because you always get mad when you miss something, right?
It's true.
So I like to get in there. If I get a little too early, it doesn't cost me a lot if it stops me out. And if it does move in my direction, then I'm not mad that I missed it, even though I still get mad that I missed it. So it's welcome to trading. So, but again, we still got this resistance that recognized the other day at 365. So I'm looking forward to drop back to 342. I had added to it up here at 365, and then it took just a chunk of it out yesterday with some profit. So I'm kind of I'm doing a dance, if you will. I don't know how else to describe it, but basically kind of getting in and getting out. Little bits here, little bits there, and then looking for a bigger move to get a bigger chunk out of a piece of it.
This was Quantum. We're looking at Home Depot right now. I don't know if that's what you're asking about, but we were on Target before, and now we're on Home Depot. By the way, guys, if you have I hope this goes without saying, but if you have any tickers that you want Tony to look at, drop them in the chat. This is the time to do it. So if you're like, hey, I have a stock, I don't know. Well, it doesn't have to be a stock. It could be anything really. I don't know what to think. I see a thing. Please tell me if what I'm seeing is right or wrong. Do that. Drop it in the chat. Tony can take some questions from you guys. So you've got some bearish put trades on Apple, on Target, on BX, Blackstone, on Home Depot. This is MGM, Microsoft, Qualcomm. That's those are the active bearish swing trades.
Yep.
This is a good question. Do you always buy puts, or do you also take some income? Do you sell calls?
Well, I want to make sure. Selling calls? No. As far as, are we talking about selling naked calls? No. Selling calls, naked calls is a little bit crazy. But do I buy calls?
No.
Yeah.
No. Selling not naked. You can just sell like a call.
Well, yeah, that's what I was wondering. Is it? Yeah. If I buy a call, if I go long a call, then yeah, I mean, you just sell.
Would you like sell it? Like do like a covered call situation? Like,
if I own stock, yeah. Which I don't. I only own one stock, and it's just a little position. I mostly got it in my kid's account, so.
Yeah.
But yeah, I don't cover calls are a great strategy. But it's not something that I utilize. So
okay. All right.
But yeah, I basically buy calls and puts. I don't sell calls or puts. Selling calls naked is a little bit crazy. Selling puts naked I've done before. In fact, I did it last year on what was the big drug company that went to 279 or something like that. Starts with an N. I sold the $13 puts 2 days out.
No, I don't know.
Yeah, it was Novavax.
Yeah, no, okay, I was right.
Okay. I'm trying not to even remember the symbol because I get cranky about it.
NVAX, sorry. Let's go to the chat here. Boy. Lorenzo wants us to look at Workhorse. Is Workhorse below $5? I think it probably is below $5.
Where's the
WKHS?
WKHS.
I'm just gonna guess I'm gonna guess 450. Where's it at right now? Oh,
340.
Oh gosh. Yep. That hurts. That's painful. Is there anything here, Tony, or no?
Yeah, I'm looking real quick. Throw some lines on here. I basically just look for major support and resistance levels. And basically where we are right now. That's essentially it. I mean, 250 to 420 is kind of the range. So it all comes down to, what's your goal? I mean, I do extensively short-term trading. I don't really do anything else. So, long-term investing is not really, I've got a couple, that's about it. But everything else is just short-term trading. So, and if it's not developing some kind of pattern, or if it's not at a major support or resistance level, for the most part, I just ignore it. So this one, I mean, obviously it's gotten beat to death. So if it stays above 250, yeah, but earnings is coming up too. So I'd wait for earnings to see what happens.
The earnings, I don't even know how much that matters, Tony, to be honest with you. This was always going to be a moonshot to begin with.
What is it? I don't even know what this company does. I mean, I've seen it before, but
they do electric cars. We had them on the show. Oh, gosh, what, it was a year and a half, 2 years ago now. It wasn't 2 years ago, a year and a half ago. The company has been mismanaged from basically from the get go. There was supposed to be this. They were supposed to get this contract, Tony, this U.S. Postal Service contract that would have it would have involved an order of however many thousand trucks, because the USPS is electrifying the truck fleet, but Workhorse did not get that order, so then they sued, and it's like a whole thing, and I don't know.
Well, that explains that gap back there. Some kind of news, probably, huh?
Yeah. All right. Let's go to one that. Let's go to a company with like an actual business here. Let's go to HPQ. Hewlett Packard. I can never remember which ticker is which. I don't remember. Is HPQ the printers, or is HPE the printers, and the other one is the because one of them is the enterprise software, and one of them is printers. I don't remember which is which.
I didn't even know they split them up.
Yeah.
Interesting. You learn something new every day.
Yeah.
I'll just move those up there. I mean, there's kind of the range that we're in, and beginnings of a head and shoulder pattern. The neckline's a little bit sloped, which I don't like, but if it continues down from here, then we have a almost textbook head and shoulders. So if it broke 35.
Oh wait, HPQ is CPUs apparently. Thanks. All right, HPE is enterprise. Oh yeah, the E is enterprise. Duh, that makes sense. All right.
Oh, interesting.
HPQ. Yeah.
Yeah, I didn't know they split them up. So this is just a hardware company?
Yeah, I think so.
Interesting. Well, from a pattern perspective, like I say, if it continues to fall from here, we've got a head and shoulders, and if it breaks 35, it's headed to about 31. If it breaks out of 39.20 to the upside, that's a whole different ballgame. But that's all I see with that as far as HPQ goes.
I got a couple for you, Tony.
Oh, there we go.
I have made a couple of trades in recent days. I would like your thoughts on the one I'm least convicted on, which is ELY, Callaway Golf. I bought this one on I think I bought it on Tuesday.
This last Tuesday?
Like 3 days ago, yeah.
This week, which was
Yeah.
what? The 9th? The 8th?
I don't know. The 8th?
That's the 8th right there.
If it helps, if it helps, I can tell you what I paid for it. I have to look it up.
No, I don't care.
Okay.
I'm just is it a long-term hold, or are you just trading it, or what's the plan?
Well, so okay. The thesis was all right. I bought two stocks. I bought FWONK, which is Formula One, and I bought Callaway Golf. The Formula One thesis was hinged on the fact that the season starts in a month. The Callaway thesis, which is ELY, hinged on the fact that they're making another documentary series about golf in the same way that they did about Formula One on Netflix, and it caused a massive increase in popularity in the sport. Now, I don't know when that documentary is coming. Probably not this year, I would imagine, but I guess I don't really know anything. They haven't said anything about it. But Aaron mentioned the seasonality play, the fact that, you know, we're coming off the holiday season, and I know they had earnings yesterday. I didn't even look to see what they were. So this was more of a speculative thing. It's not a very strong thesis. It was more of like, hey, maybe in the next year or so, golf will become more popular. That's kind of all I've got. Sorry.
No, that's fine.
Terrible.
That's terrible. No, there's nothing wrong with it at all. I mean,
gosh, that's so
it may work
bad.
out. You never know, right?
Oh man, whatever.
It's always a 50-50 shot. So
well, it's true. I could either make money or lose money or flat. So
yeah, which is losing these days, especially with inflation at the rate that it's going. But from a technical perspective, I mean, it's in intermediate term, it's in a downtrend. Long term, we're still kind of in an uptrend. But on the short term, I mean, you can see here the lower highs, lower lows. This is trending lower. But if it gets a catalyst, it could pop up. So if you're in around 25, then yeah, if it breaks below 22, then that's not good. That would be bearish. But right now, I mean, it looks like there's a possibility for it to pop up to the upside.
Okay.
So
I'll take that.
But yeah, it's I mean, that the $25 level is or 24.20, whatever that is, right around that area. There's a good support level, so it wasn't a bad move. There is I don't consider that inverted head and shoulders just too small for me. I don't like the little ones, especially really small ones, but which is a little bit of a reversal signal. But so just figure out where you want to get out of it. At what point do you want to get out and decide it's probably not going to go in your favor? That's always my question.
What I should do, I should probably do it right now, actually, before I forget, because I will forget, is I probably should just throw a stop loss out there of, I don't know, 15%, 10%, 15%, something like that. Just to be safe, because I will forget. What about let's do a couple more with Tony. Let's do who mentioned? I want to make sure that I think more than one person mentioned. Was it? I'm scrolling up in the chat right now.
The other point I'll make on Callaway real quick before we move on is that pre-COVID, Callaway was trading at, let's see, $22 a share. It's currently at $24 a share. So it's like a 2% increase, less than 10% increase.
Okay.
In that time through COVID, we saw a huge boom in golf. Like, I don't think that's reflective of how much golf has grown throughout the COVID pandemic.
I should probably look at what the earnings were yesterday.
Not great. I mean, the stock's trading down like 5% today. So,
All right. Well, let's do one more. Let's look at Alcoa. Let's look at some steel names here. AA.
Oh, this one kills me kind of. This is when I bought the stock. Not only did I buy the stock, but I bought it in my kid's account back at like $4. Actually, I sold puts to acquire the stock at $5.
Oh wow.
So my cost basis was like $4.50. That was at the very bottom, and sold out of them at. I think I got a double out of them at like $8. So now I sit and look at this, go, but I just hung on to it for a year and have $7,000 in their accounts. So, and I just opened up.
I also had a couple of those, and in this scenario, I was a child. Thanks, Dad, for buying a Hovnanian resources for me. Appreciate that. You don't even know what that is exactly. All right. Anyway, Alcoa.
Yeah, this one's just been on a tear. This has always been one of my favorites, especially to trade puts on, or anything, calls or puts. At least it used to be when it was trading, in the $20, $30 range. The options were $1. It's very liquid. They're very easy to get in and out. The spreads are small. There's lots of open interest. So it's very favorable, especially if you want to trade small stuff, which in my kids' accounts I just started a year and a half ago. I just threw $1,000 in there. So Alcoa has been a favorite to trade. Yeah, we're breaking out the highs, but we're not all-time highs. I was looking at this yesterday, actually, and we've still got quite a ways we could go. The question is, will we go back to that 120, 130 level? And it certainly looks like it wants to. I mean, tremendous amount of momentum, which I think part of it's the inflation. Metals are increasing, commodities. The only thing, yesterday there was a beautiful Harami pattern. If you take off that last candle, nice round little Harami pattern. So I was looking for it to actually, and I would expect this thing to slow down and probably go sideways a little bit, just like we did here. It ran from 44 to 58, and then it went sideways for a month before it took off again. So I'd be looking for some kind of flag pattern to develop here. Just a small little range that it stays tight in for a few days, maybe a couple weeks. And then if it breaks north, then I'd be getting bullish on it. I'd buy calls. That's somebody asked about. So yeah, if I'm bullish on something, I buy calls. There's not a whole lot I'm bullish on right now. So I think overall, I'm pretty bearish on the overall market, just in general. So I don't look for, if a bullish trade shows up and it appears, then I'll take advantage of it. So,
all right, let's do a couple more quick. Let's do Peloton and we'll do Lucid. PTON. This should be interesting. Actually, Peloton's holding on to those gains. Oh, not today.
Yeah, it's down a little bit today, but I'm just going to kill all these, get rid of all of it. Just start fresh. Not eat fresh, start fresh. Just looking for major points now. And there's not a lot here. Historically, obviously, you can see the volatility. These things, and this is a weekly chart, but still, these moves are. A lot of times in these bigger charts, you'll see little glitches, and these things just tank. It just moves super fast, which is good if you're on the right side. If you're on the wrong side, it's painful. So, nice little triple bottom formed out there, about 25. Question becomes, will it hold this level? I would expect it to come down, and if this is where fundamentals can come into play, which I don't really do, but what is the company worth fundamentally? Is there a valuation that you can put on it? From a technical perspective, it looks awful, but I would maybe, if I was, a short-term trade, pick something up at 25. If you're bullish on it, if you think it's going higher, but I wouldn't buy it unless it built a nice little base right there about 25 and held it. That's me.
All right, 25. So, and then Lucid, last one, Lucid, LCID.
LCID, Lucid. That's another electric, right? These guys just opened I don't know if it's open yet. They just built a dealership in South Seattle. I was driving by it a couple of weeks ago. It looks nice.
The dealership or the chart?
The dealership.
Both. Oh,
Okay.
oh, that's not what I thought he was.
Sorry, should have been clear. The chart's not bad. It's not awful.
Oh man.
But this is one thing. Then this is a hard pattern to trade, but it's a good pattern to know that it's there. It's a broadening pattern. Some people call it a megaphone, which is just an indication of volatility. And the swings are getting bigger and bigger as it goes. And volatility, usually swings like this typically show the end of a trend, end of an uptrend typically. So based on that, I would say Lucid is probably going to head lower, but we're sitting here at this 125 level is a pretty solid support level, but it's also broken here too. So if it gets back below 125, then I would be bearish on it too. I don't know what the next level is down here. The next major level is about 107. So, but these are the broad patterns are really hard to trade because the swings are so big. So I always look for something else. So in this case, you've got that, like I said, it's pretty solid support there, about 125. So anything below that, bearish. Actually, I'm glad. Who brought this up? Was that Money Mitch I saw?
No, I don't know. I'm not.
Somebody did. I know somebody saw it. Yeah, there it is. Yeah, no, I'll be looking at puts on this.
Awesome.
Now I'm getting cranky on Microsoft. It's headed back down. I had my stop too tight.
So it's all good. I've been cranky all day anyway. Nothing to do with the market. Tony Benson, Patterns in a Flash. Thank you so much for joining us today. We'll talk to you again in a couple weeks. Have fun watching the big game.
All right. Thank you. Take care, guys.
All righty.
See you next week, Tony, or maybe following week.
Yeah. All right. It is 1:31. Oh, sorry, Francis. Shoot. I apologize. All right, Francis. We'll come back in 2 weeks and we can ask Tony about Cloudflare. How about that? And ET.
Wait,
yeah. What's up?
I got an ask to the audience because I have a new stock I've been looking at, but I want to do some quick sentiment gauging right now.
Okay. Yeah. Let's do that.
Put a 1 in the chat if you wear eyeglasses.
You trying to buy Warby Parker?
Yeah.
Why?
I might. I don't know. I mean, I don't wear glasses. I don't know how popular Warby Parker is.
1 in the chat if you wear glasses. Okay.
And then the subsequent question was like, do you 1 or 2 if you have an opinion on Warby Parker?
Like the brand?
Yeah. Like, have you ever had a pair of Warby Parker glasses?
These are Warby Parker glasses.
Oh, do you like them?
I had a bit of a bumpy road the first couple months. They were sliding a lot.
Okay.
I couldn't quite get them adjusted the way. I guess I have a weird shaped face, but I've had them I got them in August of 2020. August of 2020, I got these. So it's been about a year and a half, and yeah, I like them. That does not mean I like the business. But
So Warby Parker IPO'd September 2021. So it's only been on the stock market for about 6 months or so, but was hanging around $60-$50 for its first couple months on the market, and has since crashed all the way down to got as low as $30, and then at 30 it got some buyers and came back up to about 38, and is now trading off that 38 level. And this was one that I saw when I was looking at insider buys, and Warby Parker had a lot of insiders buying the stock down here at $30, and so it got my attention to the stock, and I've been looking at it, and I've been looking at the company's business model, at their cash flow, and I think it does look interesting down here. And again, I don't know too much about this industry or company specifically because again, I don't wear glasses, but that's what I'm really curious about. Is like for the people out there that do wear glasses, do you see what's the view of Warby Parker? Good glasses, bad glasses,
yeah, good.
Overpriced.
My personal experience was that the entire buying process, actually it was more than that because I also got an eye exam and I bought these frames, and the entire process was shockingly easy, shockingly easy. They were very good. I mean, they're digital first, right? They were very technology minded. So I was getting emails and text messages and everything. It was a very clean experience. I think what I would do if I were you, Aaron, is rather than look at Warby Parker. I understand you're looking at that because you saw some insider buys and it's not whatever. But like, I don't know how like the entire direct to consumer business is a great business model in a lot of ways, but the stock market does not appear to think that at this time. There are many D2C direct to consumer companies out there that are public that are having a bad time. Casper just got bought out, and they're direct to consumer mattresses. I'm thinking about Stitch Fix, right? Direct to consumer wardrobe. I'm thinking about Warby Parker. Who else, chat? Who else? What are some other D2C companies out there that are just? I think it may be you may be better off like doing some. Like,
But is Warby Parker strictly direct to consumer? I thought you could buy Warby Parker glasses in like other glass stores. Maybe not.
You can, but it's primarily.
I think that's their primary.
Primarily direct to consumer. I would Google some like direct to consumer stocks.
Oh no, I don't even need you to know.
I just like, I'm just not sure how the stock market. They're clearly not rating them very highly right now. So I business the experience is great, the product is good, but that doesn't necessarily mean that the stock has to go higher. So I'm highly skeptical of any disruptory retail store like this, which is basically what it's not retail, but I don't know, specialty retail. I don't know what you call it, but
they do have brick and mortar stores.
Yeah, they have one right here. Actually.
They have one, on Woodward where we're at in Detroit, and I think they're looking to open more. So I haven't done like my full DD on this. I've kind of skimmed through its investor deck. Like I said, what got me interested in the stock was seeing the insider buys down here at about $30, and just from a valuation standpoint, I mean, at one point the market was pricing it as a $50, $55, $60 stock, and now it's only at $30. So I think there's some value there. I'm going to do some more DD on this over the weekend to see if I still like this play, and if I do, what the conviction is there to see like on a scale from 1 to 10. This is a 10 for me versus this is like a 3 for me. So not just something that caught my eye, and I want to do some more sentiment gauging, because if everyone is, everyone who wears glasses says, well, Warby Parker is the best person to buy glasses from, then like, okay, that's something that I want to consider as an investor.
Fair enough. All right, I don't know where our next guest is, so in the meantime, let's do a quick crypto update. Look at the heat map. How are we doing out there in crypto land? Let's find out. Ouch. Ouch, ouch, ouch. Not what you want to see right across the board. Bitcoin down almost 4%. ETH down almost 4%. Binance Coin down over 3%. Solano. Hey, relative strength in Doge and Sheep today. That's fun. I saw a thing. Dude, I got served an ad yesterday for Near Protocol.
Did you actually?
On Reddit.
Maybe we've been talking about it too much.
How? It was on my phone.
I don't know. Maybe because your phone's sitting there while we talk about.
So they're listening. I was on the Reddit app on my phone, and I got served an ad for Near Protocol. What's that about?
They're 100% listening. Like, this is a fact.
Says the guy in my ear.
Yeah, just like I am.
All right, whatever. Anyway, crypto in the red. I'm sticking with my thing. I'm buying a little more every month, a little more every month, a little more every month. Not doing anything other than that. This segment is brought to you by Voyager. If you want some free Bitcoin, it is so easy to get. Just go to the Voyager app, create an account, use the offer code ZING when you sign up, fund your account with at least $100, make a trade, just one trade, and they will send you $50 for free. Do it. Do it, as they would say. All right. Our last guest of the week is backstage. It's been a long time since we've spoken to this guy, Alex Cole. He runs Go No Go charts And I said this off the top earlier. The guy like writes the curriculum, like the CMT curriculum or a part of that. I don't know. We'll get him to clarify what he helped write or didn't write. But let's give him the special intro. Let's bring Alex Cole on Benzinga. Alex Cole, welcome to the show.
Good afternoon, sir. How are you?
I'm fine. I'm fine. How did I butcher it at all? I know you wrote the curriculum for the Wiley something or another. I know I butchered it.
No, close enough. I'm the
Close
SME
enough.
for the SME for the Wiley CMT prep course. So I do a lot of work with the CMT, but I created the content for preparing potential CMT candidates.
Money Mitch, if you're still in the chat, I think he is. You're probably reading some of Alex's work right now. Because he's studying for the CMT, so I'd imagine he's reading your
possible.
work.
About 120 video lectures as well.
Nice. Before we go any further, what kind of guitar is that?
This is a Gibson SG.
There we go.
Yeah.
Okay, can you share your charts for us, please? There's that little button in the middle. You can share charts,
Yeah.
and I want to see what you're looking at here. But while he's doing that, though, something did just happen. Hold on, did something just happen out there? I just saw Apple making a new low of the day.
Something happened.
No, I mean, yeah, we're falling out of bed here. I don't know. Falling out of bed is a strong. I don't know. Maybe it isn't. But did something just happen? We had a huge volume spike in the last 2 minutes.
I see a headline. The U.S. believes Russian President Vladimir Putin has decided to invade Ukraine and communicated those plans to the Russian military.
That's fun. That's fantastic.
Should we go buy some Lockheed Martin, Raytheon?
Probably higher, right? Let's take a look. LMT.
Yep.
Yeah. Very good instinct.
Hey, there's always buying opportunities. Whatever's going on, there's always buying opportunities. Raytheon, RTX up. Oh no, RTX is not up, but Lockheed is.
There's LMT right there.
You can see that leg up right on that headline.
Yeah.
I don't know. I'm take it or leave it. I'm leaving it. I'll worry about it when I get my name called in the draft. Till then, I'm not worried about it.
I thought there goes my thesis that everyone was going to be nice while the Olympics are going on. I guess that goes out the window now, but whatever. Let's bring Alex's charts up on the screen. Here they are. All right, we've got Bitcoin up right here. Any specific reason why we're looking at Bitcoin?
No, not particularly, other than, well, yes, of course, but we just entered a go trend. So Bitcoin has been in a no-go for a while now, and over the last 2 or 3 bars, we've seen all of the trend conditions combine to let us know that the trend conditions are favorable, and it's entered a go trend for the first time since these highs back at the end of last year. So that was something that's been pretty interesting. That we've been sort of pulling out in research over the last week or so.
Okay, explain that concept. I think people may not be familiar with. I know some people in this chat are familiar, but some people are not with the go no go.
Yeah.
Thought process.
Sure. So what we did was we wanted to take several of the concepts that had sort of proven themselves over my time working in more institutional finance. And blend it into one chart so that you could still hopefully do your traditional technical analysis, looking at supply and demand, market dynamics, that kind of thing, pattern analysis, but get a real sense of the overall technical picture still by color coding. And also, a big goal or the effect of that is to remove some analysis paralysis. We've all seen charts. I was guilty of it myself for a long, long time, of putting so many things that I thought had value onto a chart, but then rendering that chart almost impossible to read because just too much going on, and then you can't see price anymore. And of course, we like to keep price the focus. So that was sort of the reasoning behind creating a chart that hopefully remains relatively simple and easy to read, but that puts the complete technical picture together for me and for clients.
Okay, so how do we read this here?
So the go no go trend indicator is what paints the bars in the price panel, and that will flow from blue colors the strongest blue is the strongest go trend. The weaker blue, the aqua color, showing some kind of weakness. And then as it goes into a no-go trend, we see the pinks and the purples. The purple being the strongest of the no-go trend, meaning that all of the conditions in the indicators or all the different concepts that are in there, all telling us that the trend is at its most bearish when it's purple. And then we also have these amber bars that you might see here over the right of the chart. And we call those the go fish bars because of Jesse Livermore. If anybody's on the line that's read about Jesse Livermore, he said there was a time to go long, time to go short, and a time to go fishing. So those are a sort of directionalist color where the market's trying to make up its mind. You often see those as a bridge, as you might expect, between trend colors. And
So what is in those indicators though? I mean,
it's proprietary blend, but it's all of the sort of it's the things that over the years have been sort of the most used in our space. So there's nothing out of left field like moon phases or anything in there. It's going to be the indicators that you see most often and things that you've used most often and you see on the charts of most technicians.
Alex, who did you pay in our chat to say Alex Cole is like the Elon Musk of technical analysis? Who did you pay?
I can't see the chat, but well, thank you.
Okay, so wait, let's go back to the chart here. So the Bitcoin price action, it just came out of the strongest no-go indicator.
Yeah, we got our no-goes about just around sort of 60,000 here towards the end of this consolidation. And then we've obviously been in a no-go on Bitcoin all the way down to the 32,000 area. And you know, we saw a strong rally for a couple of weeks, and it was enough to push us into the amber bars and then the weakest of the go form. So we're looking at a new go trend, and we're going to wait and see if it can maintain these colors and become a bit more established. The other point to mention with the panel on the bottom was to take the same ideas of blending multiple important indicators, in this case momentum, into one that could give us the whole picture, but keep us focused on the price. And so when you see the panel along the bottom, the sort of important thing to note is that when we're at the zero line, that's going to tell us that all of the inputs to our oscillator are in neutral territory. So what you see a lot during a strong trend is the oscillator, let's say if it's a no-go, should spend most of its time below the zero line. So we get an objective level that can be used there as support and resistance. And if it breaks above the zero line when in a no-go, like it did here in the middle, that was a cause for concern for us, but the trend colors never changed. This time we came up to the zero line. We were expecting it to be resistance again here. And it would be, you know, it should be, if the no-go is healthy, you wouldn't expect excessive buying in a downtrend. And that's what it would be telling us. And so when we saw this significant break above the zero line happening and then the go trend colors changing, then that sort of everything now is pointing towards momentum being on the side of the go trend. And then the next step would be to watch to make sure that the zero line now holds as support. So that's a really quick, hopefully I didn't talk too fast, but that's sort of the overview.
Which of those is the leader and which is the laggard, the lagging indicator?
So the go no go trend indicator is a trending indicator, so that's going to lag. Just like any kind of trend identification tool, you need to see enough of a movement in a certain direction to be able to say I can identify a trend change. The momentum piece is this lower panel, so that's going to lead, just like you'd expect something like RSI or any of those momentum indicators will lead the market. So when you get this change in momentum breaking to the positive side of the zero line, in this case, that leads then the change or the reversal in price trend. So just as you'd expect, a momentum indicator is going to lead and the trend indicator is going to lag slightly. You're never going to find, we're not bottom pickers, especially when you're working with long-term institutional money managers and such like that. It's not about finding the tops and the bottoms, but about trying to find the big moves and making your bets on the side of the trend.
Got it. All right. So yeah, you brought Bitcoin up, but what else is on your radar here? What other charts? I would like to see some instances of a trend change.
Well, what have you been talking about? Have you been talking about anything you'd like to see specifically? We've been doing a lot on just sort of the volatility of the overall market. So,
well, yeah, I mean, you know what? Can you pull up the SPY or the Qs? I don't care which one.
Yeah.
Let's just take a look see here.
Yeah. So this is the daily chart of the SPY. I was talking to some people last week about the importance of this sort of 45-50 level. We had some trend lines drawn on here. And we kind of came right up to it and tested it a couple of times, even a little bit higher, but have sort of been turned away from these levels. So this is something that we've been looking at a lot with clients, is just where the market's headed. The no-go came in obviously mid-January, and we've been rallying sort of a no-go counter-trend rally into the pinker, weaker bars, and then we've rolled over again. But this is an interesting bit here, because that shouldn't have happened. If this no-go trend was going to roll over, this should have been resistance, and it would have gone back into negative territory. So we're looking at this as a bit of a conflict. We're going to see what happens here. If this goes right back to the zero and then below, then we'll expect another leg lower in price. If this can go, clearly into positive territory, that's a good sign. Maybe this is putting in a sort of a swing low, but we'll have to wait and see on that.
Does the Qs look the same as that? I'd imagine it does.
Yeah, Qs is very similar.
Yeah. Jeez.
Yeah.
Yeah, it's tough out there. What can I say, guys? It's tough.
If you want to, if you're looking for something that has been working, we've been. It's all about the cyclical sectors. So getting into things like oil or energy, the XLE or anything like that. This is where, over the last couple of months, there's been a lot of rotation with sort of institutional clients into sort of the cyclical sectors, financials, energy. That's where things have been working. So we've been looking at those sectors a lot.
Where can one get these charts? BNZNB in the chat wants to.
Well, we have a website, gonogocharts.com. We're on TradingView, stock charts, wealth charts, Metastock. So there's options across different platforms. We're adding platforms hopefully as quickly as we can. But the options you can find, and you can always reach out, info@gonogocharts.com if you have any questions. We're always happy to help.
We should get these on Benzinga Pro. I mean, we use TradingView for our charts in Benzinga Pro, but does that mean we have? I don't know.
No, but it probably means it would be easy to implement. Given
all right.
These are TradingView charts here.
We'll have to talk about that. We'll talk about that offline. Let's go and negotiate right now.
This was the Lockheed Martin chart that you were just. This is the daily. I heard you guys talking about that. So
yeah.
That's Lockheed Martin right there on TradingView.
All right, so you should have bought this thing at the end of the year, and that's that. Hindsight 2020. Same thing applies as when we had Tony on about an hour ago. If you have any questions for Alex, you want him to look at your stock that you own or stock that you're eyeing or whatever, drop him in the chat and he'll just fire away here. But big fan of these charts because I'm a very visual person and I like colors, right? So colors make it easy to it's very simple. Like the best charts are the charts where you look at it and you know in 1 second what to think, right? And the colors do the work for you. So for me
it was sort of a personal thing that I needed because I would talk to people in any industry and any role. You could be talking to an oil trader trading 5-minute charts, or you could be talking to, a long only mutual fund guy. So having an overall technical perspective quickly was very important to me, and that's where it sort of came from.
All right. I have to go back into my scanner right now because things are popping off right now. Oh man, what's going on? I'm seeing a lot of just movement. Market seems like it's digesting that Russia headline. We talked about the market or the overall market already, but if you can look at like gold, GLD or gold, for example, right? I mean, just huge spike and off the highs now. TLT had a wicked spike off that, just absolutely wicked spike. It's giving back those gains. Oh boy. Everything else is pretty weak.
There's always something. I mean, we try to look across across, like you said, there's always somebody was saying there's always a bull market somewhere, right? So that's what we'll do a lot of.
Oh, what is that?
We do a lot of maps work with applying the go no go trend concepts to panels, so that you forget price action, just look at the pure trends. We do it on a relative strength basis as well as just asset classes. And so you're looking here at equities, treasuries, commodities, the dollar, and you can sort of see where the major trends are. So it's interesting that you were just bringing up gold. Commodities have been outperforming for a while, and gold has not been such a friend to everybody, but maybe this is gold's time. And then the other thing we do is relative strength map. So this is an example of applying the go no go concepts to relative strength ratios to get a sense of where the markets are headed in terms of rotation into value versus growth, cyclical sectors, and you can see from these maps that we've been in go trends across the defensive sectors for some time, like staples, energy, financials, and our what everybody likes to talk about. Technology has been in a no-go. Communications in a no-go.
Technology. What is that? Is that the third from the bottom? Which one is technology?
Technology is
the fourth one. Okay.
One.
So can you go back to the orange there? Yeah. The on the technology bar, the orange. So when is that?
That was January.
That was in January.
January 5th. Yeah.
Oh, I thought this was going back a lot further than that.
Well, it depends on how you look at it. If you want to look, you could pull this up as a weekly chart. The bars are just daily bars here.
It's corresponding. I see.
Yeah.
I see. Okay.
You could put it up on a weekly chart and see.
Can you? I want to go back. I want to go back 52 weeks because I want to see. I would just be curious to see what the 52-week version of that looks like.
Yeah, this is the weekly. Well, 52-week on a daily is different from a weekly chart. This is a weekly chart, and you can sort of see the slower trend changes. Technology on a weekly basis still in a trend, but if you want to just look at
wait a minute,
this is
daily. On the weekly. How can that be now, Alex? How can that be? How can there be such a discrepancy? I'm looking at the fourth bar from the bottom. It says XLK right there, guys, and you can see the purple, which Alex said before indicates no go.
Yeah, this is the daily. Yep.
Right. This is a daily, and you can see we kind of flipped from the blue and the teal in when the calendar turned. We went from blue, teal to purple. This is on a daily. Oh, this is a teal. Oh, you're looking at TLT. No. This is okay. I see. Sorry.
The price panel is
okay. So how can the weekly and the daily look so different?
At different periodicities. It's the same as looking at. Here, look, I'll pull it up on a price chart for you. Look, it's the same as looking at, let's say, the S&P on a weekly versus a daily. So this is the XLK on a daily, right?
Right.
Much faster moving. The weekly is still in a long. Oops, that's the wrong one. We're still looking at long-term trend.
But I thought, oh my goodness.
Yeah, I mean, if you look at this is.
I did not realize this.
I mean, if you look at and if you just draw sort of a trend line on here, you can see where we sort of bounced off a long-term trend line.
Wait a minute.
But this is concerning even on a weekly. You see how the oscillators found support at zero over and over and over again. We're struggling even on the weekly now with the oscillator below zero. And then the weakness in the aqua bars on the weekly.
Wow!
But it's been a phenomenal almost 2 years. This is the long-term trend. If you can, we are where we are. So, but you can, it all depends on what periodicity and what your risk horizon is, and you can go down to a 5-minute chart. Same ideas apply, but different picture.
All right. We got to wrap it up. Alex Cole, Go No Go charts. Check it out. The website, gonogo.com, right? Or
GoNoGoCharts.com, yeah.
And find him stock charts, trading view, and maybe one day soon Benzinga Pro. Alex, a pleasure to chat with you. It's been too long.
Yeah, anytime.
Have a great weekend.
Thank you, sir. See you soon.
All right, AB, that's a wrap. We made it through. We made it through the show. We powered through on a day where the gremlins... That was loud as heck.
We needed it. We need a little pick me up. Of course, off this news out in Russia again. I don't know. It seems like one of those things.
Sell the news. Sell the news. Is that
It just seems like one of those things that this can be fun for mainstream media to pick up and run with all weekend, but I don't think
so. So there's war in Ukraine. There's a Super Bowl, and then there's Valentine's Day.
Yeah, but how?
What a weekend.
What I'm going to research as soon as we get off this show is what this means, what all the implications are for the oil and natural gas markets. 'Cause that seems to be what's moving the most right now. So that's going to be my homework this weekend. Figure out how the Ukraine-Russia conflict impacts and what implications that will have for the oil and gas industry, natural gas.
All right.
Yeah. Other than that,
Smash the like button, please. If you are in Ukraine or anywhere in that part of the world, please be safe. I know we have a very global audience. We got to hop, though, because Mooner Boss is doing their last show of the week live right now. And then they're going to also preview next week. The guys are going to be at the ETH Denver conference. Do you guys know about this? ETH Denver. Logan and Ryan are going to be there. If you're going to be there as well, hit them up. But Mooner Boss going live right now. Everyone hit that like button. We'll catch you guys later. And go Ram Angles.
Bengals.
Ram Angles. Ram Angles.